So you want to start investing in stocks and don't know where to start? Well, you come to the right place. Let's talk about it. What's up everyone, Jordan here, and if you're here to learn about how to invest in the stock market, then I'm going to give you a reasonable understanding on how to do so in about 5 steps. Quick disclaimer, this video is not sponsored by anybody that I will mention in this video. This video is just for entertainment purposes only, and it is not financial advice. Alright, starting with step 1, determine your investment goals. Your investment goals are going to determine what kind of investor you are and how you want to invest, at least right now and possibly in the future. And you want to have 3 things in mind when you're thinking about this. First is why you want to invest and what for. So for example, are you investing for retirement? So for later, you can use your investments to fund your lifestyle. Or are you investing for income? Are you doing certain kinds of investments to make income right now? The second would be risk tolerance. What are you willing to lose? And really what this means is, what are you comfortable with putting in the stock market in terms of money? And what are you willing to lose or gain? For example, if you have a high risk tolerance, that means you're usually comfortable with investing in high risk stocks. Stocks that go up and down very quickly, and it can go high at the beginning of the day and low at the end of the day. Sometimes where you could be losing a lot of money or gaining a lot of money. You could have a low risk tolerance where you invest in stocks that are very conservative, stocks that don't go up and down very quickly, but moderately over time. For example, if you have a low risk tolerance, you may invest in stocks that are stable, reliable, potentially give a dividend. All right, so the last thing we're going to go over when it comes to your investment goals is, what is your investment horizon? How long do you plan on investing? Do you plan on investing for the short term or long term, or a mix of both? For example, if you're investing in the short term, you may be thinking of purchasing a stock or investments that you would likely sell shortly after or in a short time frame. When you're a long-term investor, you're thinking of buying or holding a stock for a long time. Like I said before, you can do a mix of both. There are certain companies you would like to purchase that you hold for the short term, and there are certain companies that you might want to hold long term. So now that you know your investment goals, and hopefully you've written them down, now you want to sign up for a brokerage account to make your first purchase of a stock. Now you have a couple options to choose from, but mainly brokerages nowadays are online. May charge a fee when you do any kind of purchasing of a stock. Some do not. Mainly ones that do commission free, which is not charging the fee, are Robinhood, Webull, and Fidelity, amongst others that also have online commission free trading. I use Robinhood, and that seems to be the simplest platform to use and has the most information for the new and beginning investor. Please do your own research in finding a brokerage for your needs. Alright, think about opening a brokerage is like opening a checking account. The brokerage needs basic information to get you started. For example, your name, address, social security number. They may also want information about your investment goals. For example, what kind of tolerance you have, how much you're making, how much you're willing to invest, how long you plan on investing. Those questions may help them offer you certain products or certain services, or not allow you to do certain things on their platform based on your investment goals. So most companies want to tailor their platforms to the investor. So make sure you're answering those questions truthfully, because you don't want to invest in something that you don't have the knowledge to perform or do. Let me know in the comments below if you want me to dive into the brokerages I'm using, what I like about them, what I don't like about them. So hopefully you're getting this so far. Third step would be to fund your brokerage account. Just like a checking account, the brokerage account needs to be funded before you can use it or before you can purchase a stock. So most brokerages are going to allow you to link a checking account to their brokerage account so you can transfer your funds. So keep in mind that just because you transfer, certain brokerages don't allow you to purchase a stock unless the funds are settled. Settled funds means that the brokerage fully received your transfer of your funds or your cash, and at that point it's not in a pending status or waiting to be transferred. It's there in hand in your brokerage account. Most brokerages say you have to wait about 3 to 5 business days before you can use those funds to purchase a stock. Now, there are certain cases for example, like Robinhood, where based on your account status, they may give you a certain dollar amount instantly, as long as that money, the funds that you're transferring from your checking account, is being transferred over. Keep that in mind. If it doesn't get transferred over and you use that to purchase a stock and something happens, you would owe Robinhood at that point. So make sure that when you're transferring your funds from checking account to a brokerage, that the funds are available or will be available when that transfer completes. Okay, so you got your investment goals down. You set up your brokerage account and you transferred your funds or any kind of dollar amount you are looking to do over to your brokerage account. And now it's sitting there, it's cleared, it's ready to go. So now you're ready to make a purchase on your first stock. Before you do, and this is step 4, please make sure you've done your research. And research can have many forms. First, of course, if you like a company, you want to make sure you're doing your due diligence and ensuring that this is the right company that you want to purchase based on your investment goals. For example, that you've checked any financial news websites that has done reporting on the company you want to purchase. You're checking that company's financial reports, balance statements, cash flow statements, quarterly reports. You're checking their annual reports. You're viewing their investor websites. You're digging deep into a good reason that you want to purchase this company's stock, and you're doing all that before you're even attempting to purchase the company. And the reason you're doing this is because you want to make sure that you really believe or have conviction that this stock is the one you want to purchase based on your investment goals at the time. You can even invest in a company that you use every day if you would like. Now, this doesn't mean the company is the best company or has a good balance sheet, but it could be something that you're familiar with. For example, Starbucks is something that I purchase a lot, and that might be a good company for me to look into. I may do my research on Starbucks. Of course, this isn't financial advice, but look how the company's making money. Look how the company will benefit in the future, depending on any kind of condition, whether it be a recession or a good economy. Okay, so now you got the company or companies that you want to purchase. There's a few ways you can purchase a stock. The first way is placing a market order. So that means that you're purchasing a stock at the price it is at the time that you place the order. That means that once you place the order, the stock, if it's filled, or meaning if it's sold to you, you will buy the stock at that or around that price. You can place a limit order. A limit order allows you to buy a stock at a specific price of your choosing. So for example, let's say you may want to buy a stock that is at $10, but currently at this time it's at $15. So you would place a limit order at 10, and if the stock goes down to $10, then that order will execute, meaning that order will now go through and that you have purchased that stock at $10. Now, I'm just going over the few basic ways to get you started in terms of purchasing the stock. There are additional ways you could, but these would be the main ones you want to focus on at this time: making a market order or doing a limit order. Okay, so congratulations, you purchased your first stock and now you are a part owner of that company. So whenever you do purchase a stock, now you are what they call a shareholder. All right, so now that you purchased a stock, congratulations. What do you do? Now this would tie back to what were your investment goals for this particular stock purchase or set of stocks that you purchased. And the idea is to make sure you're maintaining that investment goal. Now, of course, goals could change. And if they do change, that you're adjusting your strategy, you're adjusting your goals and what you've purchased based on that. For example, you're monitoring the performance of the stock. You're checking financial news websites, you're checking up on the company, not actively, depending on what your investment horizon is. If it's a short-term investment horizon, you may be checking it much more quickly, or if your risk tolerance is high, you're checking it a lot quickly, versus if you're not, if you're a low risk investor or you have if you have a long-term horizon, you may not be checking that often, or you might. It's definitely up to you. Then you can decide, depending on if this particular stock or other ones you're interested into, you may want to buy more of the stock or you can sell it. Definitely up to you and your choice based on, your investment goals. So now, of course, I told you how to purchase a stock. I'll walk you through those steps of how to purchase it. What do you want to do now that you want to sell it? How do you sell? So similar to buying a stock, you're going to the same place to make that sale. There are some cases where investors may never want to sell a stock, but when you do want to sell, here's kind of what you want to do when it comes to that. There's a couple different ways to sell. For example, you could do a market sell order, just like a market buy order. When you do a market sell order, you're selling the stock at the price price or around the price it is at that time. So for example, if the stock is $13, you may sell it for 13, or depending on when it gets filled. The other way is doing a limit sell order. For example, the limit sell order is you want to sell a stock at a particular price or better. So one last thing is always a good tip, and it's good what they call risk management, is ensuring you have a stop loss. For example, a stop loss is where if the stock goes below a certain price, that you would automatically sell that stock. For example, let's say if you purchase a stock at $15 and you set your stop loss at $14.50, that means if the company were to do something bad or had a bad quarter and the stock were to go below that $15, you would have a stop loss, meaning it will stop the ownership of that stock. Your stock would sell at $14.50 and nothing below that. So ensure whenever you're purchasing a stock that you set a stop loss to ensure you're protecting your portfolio as much as possible by having a good risk management strategy. So the last thing I want to talk about when it comes to purchasing a stock and ultimately if you want selling the stock is tax implications. Now, stocks have tax implications if you were to sell a stock that you have purchased. There's something called capital gains tax. So every stock you sell, even dividends you receive, are subject to capital gains. There's either short-term capital gains or long-term capital gains. Now, it's important that you talk to a tax professional regarding any kind of sale of stock that you've done or will do in the future. But these are taxable events whenever you do sell a stock, not when you purchase, but when you sell it. If you were to have a good profit, right, you bought a stock low and sold it high in the same year or even in later years, that you may have tax implications when you do your taxes for that year. So keep in mind that if you were to do that, there are certain things that you want to be aware of when you're buying and selling a stock. In certain cases, if you do hold a stock longer than a year, your tax could be less than if you were to hold it less than a year and then sell it within the year. So again, talk to a tax professional before you make any purchases or sell any stock. We went over your investment goals, to how do you purchase a stock through the brokerage, and then lastly, how to sell a stock and tax implications when it comes to that. Thank you for watching this video. I hope I was able to help you in starting your investment journey. Thank you for stopping by, and I'll see you in the next one.